Is this a disappointing number, 9.1%?
No, I think it's actually a little bit stronger than we'd expected. We thought that the growth was going to dip below 9% for the first time. And I think what this indicates is that lending from the shadow banking sector has been much stronger than many, I think, are factoring in. So if you look at the recent data for loan growth, or if you look at the data for fixed asset investment, I think that points to it doesn't point to a very, very tight credit environment, or as tight as many think, based on all of the anecdotes coming out about SME lending and elsewhere. So even though interest rates through the shadow banking system have risen quite a lot, it still means that there is a lot of liquidity and capital flowing around. So I think this number is indicative of some pretty mixed signals overall.
Is this shadow banking system a ticking time bomb?
Well, it could be, and I think that the real risk for China going ahead is if growth slows down too quickly, if there is regulatory overshooting, if they clamp down too hard on things and don't have accurate readings of actual activity. I think that's a real risk. So another interesting data point that was out this morning, not in the big NBS release, was about land auctions and revenues to local governments from land transfer fees. And for me, that's really a very strong indicator of underlying activity, because in recent years, that's been one of the prime liquidity pumps, if you will, for local real economies. And so if that's slowing down, if land auctions are actually failing, that points to a tight environment in critical sectors of the economy. So that's another mixed signal. So overall, on balance, I think these numbers that came out today look pretty good. But if you scratch beneath the surface, I think there's some anecdotal signs, at least, of a broader slowdown, a more quick slowdown than many are thinking.
Well, it sounds to me like you've got parts of the economies, perhaps the wrong parts of the economy, slowing down in China. Small and medium-sized businesses employ something like 3/4 of the population. If they're facing a credit crunch, that's potentially a big problem, isn't it? That is the source of China's domestic growth.
Sure, it absolutely is. And so if you look at the statements coming out of the banking regulator, for example, they want to have ways of easing credit constraints for small businesses. But when they've done this in the past, the banks really haven't responded very strongly. And that's where the shadow banking system has played a very big role. So, but they're lending at rates of 20 to 50%. So that's add those interest costs into the performance of SMEs, and that it becomes not a credit is not the credit is unavailable, but it becomes very expensive. So this is where the regulators really need to maybe take a softer approach and find a better way to get credit to the parts of the economy that need it, not to the big SOEs.
How long can China's economy keep growing at more than 9%? We've seen 9 straight quarters of this. Now it looks like, well, you had expected to go below 9% this quarter. That hasn't happened. What happens between now and the end of the year?
Well, I think the numbers for the next couple of months and for the fourth quarter could look pretty ugly. That's especially if what I mentioned for the failed land auctions and slowing land transfer revenues points to a very more rapid slowdown at the local level. That could make the fourth quarter numbers look pretty weak. But always leading into the first quarter of the year, also the first quarter leading up to a political transition, that tends to take a lot of the controls off so that there's money floating around to make everyone happy. So the fourth quarter could look a bit ugly. I think the first quarter of next year, though, we'll see a range of new policies coming out, a new fiscal policy coming out. So the government, I think, won't let things get to a point where people are really expecting a hard landing because they want to buoy consumer sentiment. They don't want the world to look at China as the next source of bad news.
But people are starting to talk more and more about the property market in China. What happens if the bubble bursts, if we get a sharp slowdown? What's the likelihood of that, and what would it mean?
Well, I think looking anecdotally, there have already been reports of developers defaulting or going into bankruptcy. So on the margins, I think that the current clampdown on credit has already hit the property sector pretty hard. And that's where developers are turning again to the shadow banking system, and add those interest costs in. A lot of them will be in a very tight situation. So behind the scenes, I think the regulators want to see consolidation in the property sector, and so I think they're going to get that. But what the cost of achieving that is, meaning if that leads to a bunch of bankruptcies and defaults, if the costs are too high, that's where they may need to step in and provide some new supports. So the policy housing program hasn't gone nearly as well as expected. So that's one area where they're going to have to be very careful about not overshooting, and because it's so important to local economies and to local governments.
Not an easy task. William Hess, Managing Director at China Capital Economics Group. Thanks so much for sharing that with us.